What is the difference between annuity due and an ordinary annuity? Hi there, my name is Stan the Annuity Man, America's annuity agent, licensed in all 50 states, and the pioneer of CGO, contractual guarantees only. That's all that we look at. We're going to go through this, which is kind of a weird, funky, not brought up a lot topic, but you might want to know about it. And of course, the Annuity Man, America's annuity agent, I do know about it, but we're going to talk about it after this. So first of all, annuity due. That's just not a phrase that I would say 90% of agents don't even know what that is. Of course I do, because I live and breathe annuities. But annuity due, we're going to talk about that. Ordinary annuity, I think what that question is referring to is an immediate annuity, a lifetime income annuity. So the granddaddy of all annuities is the single premium immediate annuity. That acronym is called SPIA, S-P-I-A. It's been sold in this country for hundreds and hundreds of years. It can be traced back to the Roman times, of all places. But a single premium immediate annuity is a pension. It's a transfer of risk. You're transferring the risk to the life insurance company issuing the immediate annuity to solve for your longevity risk, meaning how long you're going to live. It's going to pay for as long as you are breathing. If you set it up joint with the spouse, as long as one of you is breathing, and we can structure it so that 100% of any unused money will go to your listed beneficiaries of the policy. The evil annuity company will never keep a penny. Typically, an immediate annuity, the earliest that you can turn on that income is 30 days from the policy being issued. Annuity due. Due. You're saying, what is that, Stan the Annuity Man? Annuity due, the true definition is that income starts like immediately, like now, annuity due. I'm going to tell you that I have never in my 3 decades been asked by anyone for an annuity due quote. Okay, but if there's anyone that could get one, I guess it's me. But I don't see any need for it, and I don't see a lot of carriers letting me know. America's annuity agent, I represent all carriers. I haven't been, the internal guys that want me to sell more of whatever they have, they never call me up and say, hey, we got this really good annuity due. No, I never have had that. In fact, I'm not even sure if I went out and got quotes, how many quotes I can get from carriers with that. But I wanted to address it because it does come up. When people go down the rabbit hole, they run into what's called annuity due, and that's just income starting now, like immediately. But for me, in our world, that's immediate annuities. And immediate annuities allows you to shop a bunch of A-plus carriers or better, okay? A bunch of them, so that we can find the highest contractual guarantee for your specific situation. I think I'm not going to give annuity due its due because no one's really asking for it and it's really not available. It just comes up in this internet world that I dominate, and I thought I'd just address it just because if you want to ask about it, we can ask about it. I could lob a few calls into carriers and they'd be like, no, we don't do that. I guarantee that's what they're going to tell me. And you're better off, because the annuity due is such a small world, if it's a world at all, you're better off shopping a bunch of carriers for the highest contractual guarantee, because lifetime income is primarily based on your life expectancy at the time you take the payment, or life expectancies if it's joint. Interest rates play a minor role, secondary role, so don't go out there, I'm waiting for the Fed. With lifetime income, you're kidding yourself. You don't understand how it works. How it works is life expectancy drives the train. Now, the pricing of single premium immediate annuities is think about age tranches. Just think about when you built your portfolio, you had small cap, mid cap, value, large cap, international. Let's just say that's what you have. With life insurance companies, their portfolio is 60 to 65, 65 to 70, 70 to 75, 75 to 80. That's their tranches. If they need to fill the tranche, if the actuaries come out of the closet and say, the figurative closet coming out of the thing, and they say, we need more 70 to 75-year-olds, and you're 70 to 75, then that quote's going to be higher in order to attract you. If they are full, then they aren't going to have the best contractual guaranteed quote. That is the reason that you need to shop all carriers. We've set up a consumer site that you can shop all carriers, and if you want to talk to somebody, you can schedule a free consultation call, or you can buy it right then. You can just hit the buy now button and you can buy it right then. But you're shopping all carriers and knowing that immediate annuity quotes are like a gallon of milk they expire every 7 to 10 days. We do lock that quote in for you if you find one you like with a carrier that you like and that we sign off on and say, yeah, that's a good idea. But that's the reason you got to shop all carriers, because they change. Like I had a guy call me up the other day and said, hey, Stan the Annuity Man, I want to get that quote from, I'm not going to mention the carrier's name, XYZ company, A double plus company. And I ran it about 90 days ago. I want that quote. And I went, I'm sorry, player, that's not the way it works. Remember, they expire every 7 to 10 days. They're always changing because they're always filling those tranches of life expectancy. So, we can lock that in for you, but you can't run it 90 days ago and then say, I want that quote. It does not exist. And it does not really exist until we lock it in on the carrier's paper, and my team can handle that for you and take care of that for you. I have a really good staff. I have a policy delivery and applications team that just does that. They make sure the policies go through, they make sure transfers go through, they make sure we lock in the rates and lock in the products that you want. But when you're looking for lifetime income, go to my site. If you need income to start immediately, that's a single premium immediate annuity. That is not an annuity due, okay? That's a unicorn. So a single premium immediate annuity. If you want income to start at a future date, that's deferred income annuities or qualified longevity annuity contracts or income riders. Those are the 4 product types that provide lifetime income that have numerous carriers that quote those strategies. And you want numerous carriers. You want it because annuities are commodity products. There's not one that's better than the other. The one that's best, if you call me and say, I want the best annuity, it's the one that provides the highest contractual guarantee for your specific situation, okay? So really the annuity due versus ordinary annuity, really what that means, annuity due versus single premium immediate annuity. Single premium immediate annuity, you're gonna get a bunch of carriers, the top carriers in the country that's going to be bidding on your business and offering a contractual guarantee quote to sway you to them. And so you can lock that in. I would go to my site as well to download my free annuity owner's manuals on SPIAs. I've written, it's about 60, 70 pages, it goes through it. I've also done a ton of videos on them as well. So do me a favor, click the subscribe button, leave comments if you want to. Email me, stan@theannuityman.com. I do read all my emails. The other day, we sent out a newsletter and it was to like 20,000 people. I don't know, it was a big number. And I got like 480 emails or something, but I got to them all. So, if you want to shoot me an email, I will respond as soon as I get to them. One last thing, above me is a box. I want you to click that link. It explains the process, how the process works if you want to become a client, if you want to lock in a quote, how the application process works from start to finish. Do that, and I'll see you next time. My name is Stan the Annuity Man, America's annuity agent.